United States President Donald Trump's tariff moves against Canada, Mexico, and China have accelerated global economic tensions. As you know, Canada and Mexico face tariffs of 25%, while China faces tariffs of up to 60% on certain products. Now, Europe is next in line for Donald Trump.
European leaders are expected to discuss Donald Trump's latest tariff threats as they gather today in Brussels for a meeting on defense.
There are growing fears of a major global trade war tonight after President Trump announced sweeping tariffs.
So the UK is way out of line, and we'll see the UK, but European Union is really out of line.
C'est simple, nous on pense que la priorité elle est à cet agenda stratégique et sécurité de nos frontières.
The U.S. president made it clear that EU tariffs would be announced soon, sending shockwaves through European markets. The United Kingdom, in particular, has been warned that it will have to navigate this economic crisis on its own. These shocking statements have sparked great concern among EU member states. As the bloc evaluates the situation, French President Emmanuel Macron has taken a bold counterstep, introducing economic measures that no one, possibly not even Trump, saw coming. Macron's retaliation could change the course of global trade, shaking the U.S.-EU economic relationship to its core. What exactly did Macron announce, and how are other European leaders reacting? Let's break it down. Make sure to like, share, and subscribe to Economy Explorer so you don't miss any crucial insights, and watch until the end to stay informed. Trump's tariffs, a devastating blow or genius economic strategy? Tariffs are not just political tools, they carry significant economic consequences. The EU, as one of the largest trading blocs, relies on open markets. Trump's tariff policies threaten European exports to the U.S., impacting industries from automotive to agriculture. If fully implemented, these tariffs could lead to price hikes for American consumers, retaliation from European policymakers, and disruptions in global supply chains. Could these tariffs backfire on the U.S. economy, forcing American businesses to pay the price? Or is Trump playing 4D chess, strategically positioning the U.S. for an economic advantage? Financial markets have already reacted to Trump's latest threats. The euro dipped slightly against the dollar as uncertainty looms over potential retaliatory measures from the EU. European manufacturing indices show slowing growth as businesses anticipate higher costs of exporting goods to the U.S. Beyond short-term trade disruptions, Trump's tariffs may force companies to rethink their long-term investment strategies. Will multinational corporations relocate operations to avoid the trade war, or will they absorb the higher costs and pass them on to consumers? This economic chess match could determine the financial future of millions, making every move critical to global stability. France strikes back. Is Macron leading a new economic resistance? Emmanuel Macron's response was swift. While many EU leaders called for negotiation, France proposed countermeasures, including tariffs on U.S. goods and strengthening trade agreements with alternative partners, such as China. Could this be the beginning of an economic rebellion against U.S. dominance? Macron has been advocating for a more self-reliant Europe, urging increased investment in domestic industries and reducing economic dependence on U.S. markets. His administration is pushing for an economic buffer that shields the EU from external trade shocks. France's hard-hitting economic retaliation plan. Higher tariffs on American imports to counterbalance trade imbalances. State-backed financing for key European industries, automotive, aerospace, and tech, to enhance global competitiveness. Strengthened economic partnerships with China to offset lost trade, with the U.S. encouraging EU-wide subsidies to support companies affected by tariffs. But can Macron sustain this economic defiance, or will France's economy suffer the consequences of going head-to-head with the world's largest economy? If Trump retaliates with even tougher policies, France's bold move could backfire, resulting in a financial downturn that the EU cannot afford. Industries on the brink, which sectors will be hit the hardest? The trade war scenario could drive up prices for American and European consumers alike. Businesses on both sides of the Atlantic are caught in the middle of policy decisions that dictate supply chain costs, import-export balances, and long-term investment planning. The industries most vulnerable to these disruptions are already feeling the pressure, and the economic fallout could be severe. Industries facing the biggest impact. Automotive. European car manufacturers like BMW, Mercedes, and Volkswagen heavily rely on the U.S. market, exporting thousands of vehicles each year. If Trump's tariffs go into effect, production costs for these manufacturers will skyrocket due to increased duties on steel, aluminum, and vehicle components. The result? Higher prices for American consumers, reduced demand, and potential layoffs in European manufacturing hubs. Meanwhile, Asian automakers such as Toyota and Hyundai could gain a competitive edge. By avoiding tariffs through local U.S. production plants, they may fill the void left by declining European exports. Could the European auto industry withstand this shift, or will it be forced to relocate production outside of the EU? Agriculture. The U.S. agricultural sector has already been suffering from tariffs imposed by China in response to earlier trade disputes. Now, with the EU planning retaliatory measures, American farmers could be squeezed even further. Crops such as soybeans, corn, and wheat, staples of U.S. agricultural exports, may see declining sales as European buyers shift to alternative suppliers. This crisis could drive small-scale farms out of business, causing ripple effects in rural economies. With debt levels rising and government subsidies stretched thin, could this trade war trigger a full-blown farming crisis in the U.S.? If American farmers lose their primary international buyers, the damage could be long-lasting and difficult to reverse. Technology. The global technology industry is deeply interconnected, and tariffs could send shockwaves through major players such as Apple, Intel, and Qualcomm. The EU remains a key market for American tech companies, and if Europe imposes restrictions on U.S. imports, revenues for Silicon Valley firms could plummet. Furthermore, many American technology firms rely on European-made components, from semiconductors to high-tech machinery. If European manufacturers retaliate by cutting off supplies or increasing costs, U.S. companies could struggle to maintain production efficiency. Could this be the moment when China seizes the opportunity to further dominate the global technology supply chain? Energy. Oil and gas are among the most politically sensitive commodities, and Trump's tariffs could drive up energy costs worldwide. The EU, which still imports significant amounts of oil from the U.S., could respond by shifting toward alternative suppliers in the Middle East and Russia. This could not only weaken America's energy export market, but also deepen Europe's dependence on geopolitically volatile regions. Additionally, if energy prices continue to rise due to tariff-related instability, it could accelerate the global transition toward renewable energy sources such as wind and solar. European nations, already leaders in renewable investments, may double down on green initiatives to reduce their reliance on U.S. fossil fuels. Is this trade war inadvertently fueling the shift toward a post-oil economy? The economic fallout. How deep could the crisis go? The economic turmoil goes beyond individual industries. It affects global employment, wages, and investments. If trade barriers remain in place, businesses will be forced to raise prices, cut jobs, and slow down expansion plans. The financial markets have already responded with increased volatility, and economists warn that a prolonged trade war could shave significant points off global GDP. But the bigger question remains: How long can businesses endure these conditions? Will struggling economies in Europe and the U.S. enter a recession? If so, could this be the biggest economic downturn since the 2008 financial crisis? The ramifications are massive, and businesses must brace for the worst-case scenario. Ultimately, as world leaders continue this economic standoff, the real casualties will be workers, consumers, and businesses that rely on international cooperation. Unless a diplomatic resolution is found, this trade war could spiral into something far worse than anyone initially anticipated. France and China, a dangerous alliance or smart strategy? If economic tensions with the U.S. escalate, France's pivot towards China could accelerate. Macron has already strengthened trade ties with Beijing, securing investment agreements in multiple sectors. A long-term shift in trade priorities may see European economies aligning more with China, decreasing reliance on the U.S. dollar in international transactions. At first glance, this strategy seems to be a calculated move to counterbalance U.S. tariffs. China's vast consumer base and growing economic influence provide France with lucrative trade opportunities. French exports, ranging from aerospace components to luxury goods, could see an uptick in demand as trade routes shift eastward. Additionally, China's investment in French infrastructure, technology, and renewable energy has been steadily increasing, further deepening economic ties. But could this move backfire? France's increasing trade with China poses both opportunities and risks. While China offers a vast market, dependency on another economic powerhouse brings its own challenges. The EU must balance these relationships strategically to avoid over-reliance on any single partner. China has been known to leverage its economic influence to pressure trading partners into compliance with its policies. What if China dictates trade terms that favor its own economic ambitions over France's interests? Could Europe become too dependent on Chinese manufacturing, ultimately putting itself at a disadvantage? Macron's gamble with China could either solidify France's economic strength or lead it into a trap it cannot escape. Furthermore, closer ties between France and China could strain relations within the EU itself. Germany, Europe's largest economy, has expressed concerns over growing Chinese influence in European markets. If France prioritizes Beijing over Brussels, could we see fractures emerging within the EU's economic bloc? This would play right into China's strategy of dividing Western allies, making France's maneuver a double-edged sword. The final showdown. Will this end in economic catastrophe? The economic turmoil goes beyond individual industries. It affects global employment, wages, and investments. If trade barriers remain in place, businesses will be forced to raise prices, cut jobs, and slow down expansion plans. The financial markets have already responded with increased volatility, and economists warn that a prolonged trade war could shave significant points off global GDP. But the bigger question remains: how long can businesses endure these conditions? Will struggling economies in Europe and the U.S. enter a recession? If so, could this be the biggest economic downturn since the 2008 financial crisis? The ramifications are massive, and businesses must brace for the worst-case scenario. Ultimately, as world leaders continue this economic standoff, the real casualties will be workers, consumers, and businesses that rely on international cooperation. Unless a diplomatic resolution is found, this trade war could spiral into something far worse than anyone initially anticipated. The future of global trade hangs in the balance, and the decisions made today will shape the economies of tomorrow. Will leaders find a way to de-escalate tensions, or are we heading toward an irreversible economic crisis? Only time will tell. But one thing is certain: the world is watching, and history is being written in real time. If you found this analysis insightful, make sure to like, share, and subscribe to Economy Explorer. Stay informed, stay ahead, and don't miss our next deep dive. Click on one of the suggested videos on your screen now. Thank you for being part of our channel.